plus 32.76%. When a single infrastructure company experiences a massive single-day surge of that magnitude, we really have to ask ourselves, are we witnessing the most historic sector rotation in modern financial history? The AI stock landscape is shifting right beneath our feet. So today, we're going to break down exactly where that smart money is moving. Hello everyone, welcome back to AI Market News. Today in this explainer, we're analyzing a market that is quite literally making history, and we'll dive into exactly what this means for all of us as investors. Based on available data, the macro setup we're looking at right now is being driven by a really powerful risk-on rally. A key catalyst for this has been the extension of the US-Iran ceasefire, which has significantly reduced geopolitical anxiety across the globe. Now, for anyone new to this, a risk-on environment simply means investors feel safe moving their capital away from defensive assets like bonds or gold and pouring it into higher risk, higher reward equities. Section 1, the AI semiconductor rally, entering a new phase. So that foundational optimism leads us directly into our coverage of the US tech sector, where this whole boom is evolving well beyond its initial stages. As we can see in the chart, there is some very clear upward momentum happening in the Nasdaq. Broad tech indices are capturing this renewed investor optimism, maintaining a strong structural uptrend that basically shows us institutional capital is very much still at play in the technology sector. Let's take a look at the top market movers to see exactly how this capital is flowing. Notice how NVIDIA, the traditional AI darling, actually saw a slight pullback of 1.45%, but meanwhile, infrastructure companies are just exploding. Dell Technologies surged an incredible 32.76%, alongside massive gains for NetApp and Supermicro. The mechanism here is that capital is now rotating out of those initial chip designers and aggressively moving into the hardware builders, the companies physically constructing the data centers that actually support the AI revolution. With staggering numbers like that across the board, it definitely begs a crucial question for all of us to consider. What fundamental psychological force is pushing these historic valuations right now? To understand that, we look at the Fear and Greed Index. This index measures whether stocks are fairly priced based entirely on investor emotion, utilizing indicators like the demand for junk bonds. The underlying mechanism is simple. When investors crave riskier assets like junk bonds over safe government bonds, the yield spread narrows, and that signals extreme market greed. Right now, the appetite for risk is heavily outweighing the desire for safety. Section 2, ripple effects on Japan, Nikkei, and the yen. Now let's shift our focus to the local impact, where this broader macroeconomic backdrop is sending major ripples straight through Japanese markets. The graph shows a really fascinating dynamic playing out. On the left, we see the strong upward daily performance of the Nikkei, and on the right, we see the US dollar to Japanese yen exchange rate holding near a very strong 159.47. The mechanism driving this correlation is pretty straightforward. A weaker yen makes Japanese goods cheaper globally, making export-heavy companies much more profitable, which in turn drives up the overall index. But what's actually keeping the yen so weak against the dollar? Well, as we can see in the chart, the US 10-year Treasury yield is holding firm right around 4.453%. In simple terms, the wide gap between these high US interest rates and historically low Japanese interest rates is the primary engine. Looking ahead, all of us need to keep a close eye on the economic calendar. Tonight, at 2300 Japan Standard Time, we have several major indicators dropping, most notably the US ISM Manufacturing PMI for May. This data is absolutely critical because it will reveal the true health of the US industrial economy, potentially signaling whether inflation will keep US interest rates elevated, which will for sure heavily influence the next market move. Thanks for watching. Please subscribe and hit the like button. This video was automatically generated by NotebookLM AI. AI-generated content may include errors. This video does not constitute investment advice. For full details, please check the description below.